I was at a party last night and half the room were Web3 music.
Yeah.
And they're fighting a big fight, right? It's a really hard industry because everybody's got IP rights. Film industry is the same.
Well, you're disrupting long-standing.
And they're disrupting industry after industry after industry after industry, much like the internet did, right? So this is the kind of payment value rails for all of this. So everybody's doing that. So if you think of it,
it's just not touching most of us yet.
No,
that's why you don't know. Yeah.
And so it's an ant colony.
Yeah.
And it's anti-fragile because it's an ant colony. And what you're about to do is you are about to kind of, as soon as liquidity comes back in the space, you're like feeding this ant colony and everything comes alive. So that it's very clear to me when I see it. It's like everybody's heads down building, doing their thing. And the moment liquidity comes in, the whole place explodes again.
One of the most compelling arguments for cryptocurrencies is the substantial influx of capital into the space since 2020. There are two primary types of capital that have flooded into the crypto and blockchain sectors. Firstly, we have venture capital, which has seen billions of dollars invested in both new and existing projects. Secondly, there's intellectual capital, where some of the brightest young minds are dedicating their talents to blockchain technology. For example, Kevin O'Leary delivers lectures at renowned institutions like MIT, Notre Dame, and Harvard, all of which attract the best and brightest students to the crypto space. This convergence of talent and financial resources is unprecedented, and it's a testament to the enormous potential of the crypto industry. Raoul Pal, in his latest analysis of the crypto space, underscores the significance of this development. He believes that extensive groundwork has been laid beneath the surface, and once liquidity returns to the space, we can expect a massive explosion of innovation and growth. To gain deeper insights, be sure to watch the entire video, where Raoul delves into his perspective on where we stand in the broader macroeconomic cycle.
What was really amazing, again, if you step back, is that space attracts an astonishing amount of smart people. I mean, I've never seen anything like it. And everybody is down their deep rabbit hole trying to fix some part of this. So everything was there, from gaming and how to take away the monopolies of Apple and the control over, who takes payment systems, all of this stuff within the gaming economy and the apps economy and the cultural economy. Then there's other people trying to solve payment rails. There's other people trying to solve the infrastructure layer. There's other people trying to solve the finance system and how we can put finance on the blockchain. So people like Franklin Templeton were there talking, who've been on Real Vision, about how they are tokenizing money market funds. We had the hedge funds there, how they're investing in these markets and what kind of capital's flowing. There was Caitlin Long and Novo and everybody talk about regulation and where that's going and the Bitcoin ETF. So it's so broad and the tentacles are everywhere with this extraordinary group of smart people. It shocks me every time because it gets reduced online to Bitcoin and ETH and blah blah blah. And when you actually see the magnitude of what is being built and by the types of people and the kind of smart capital, I met this guy for a coffee and I got introduced. Guy, long beard, super nice guy, and he was an OG 2011, super late with the radar screen. And he happened to just end up doing kind of VC deals. He first was he met Vitalik before Ethereum came out. So he was Vitalik, Ethereum ICO, super early in absolutely everything, really quiet, considered guy. And then he started doing VC, and I think his first VC fund, he returned 66x. Now he runs money for two people, and I won't mention their names, are two of the most famous people in the history of finance. And he just does that. And you're like, wow, one of them I know very well, is a friend. The other person who I know, I didn't know that, how much involvement he had in this space. I was at a party last night and half the room were Web3 music.
Yeah.
And they're fighting a big fight, right? It's a really hard industry because everybody's got IP rights. Film industry is the same.
Well, you're disrupting long-standing.
And they're disrupting industry after industry after industry after industry, much like the internet did, right? So this is the kind of payment value rails for all of this. So everybody's doing that. So if you think of it,
it's just not touching most of us yet.
That's
why you don't know. Yeah.
And so it's an ant colony.
Yeah.
And it's anti-fragile because it's an ant colony. And what you're about to do is you are about to kind of, as soon as liquidity comes back in the space, you're like feeding this ant colony and everything comes alive. So that it's very clear to me when I see it. It's like everybody's heads down building, doing their thing. And the moment liquidity comes in, the whole place explodes again. So yeah, it was really interesting.
Are those people also doing AI, or is that a different crowd?
There are people working kind of at the nexus of AI. Obviously, some of the VC investors cross over between the areas. But yeah, it's interesting to see the broad crossover. People obviously left, the family offices, the people who kind of lost interest. But, I was sitting with Texas Teachers Retirement System, Matt Halstead, and Matt's coming on Real Vision, the interview's out. I mean, the pensions guys are there. I mean, they've been involved, the early mandates, all of that. So look, it's not what you think it is. There is an extraordinary amount of people, capital. For me, we're in macro spring. Macro spring is volatile, it's confusing, because you have inflation, the slow component slowing down, but they've just started. The forward-looking stuff, the commodity stuff starts picking up, and you're bottoming in the business cycle. We saw the ISM coming out today, and it looks like it's at a bottom, and that's the work that Julian and I have done at Global Macro Investor. So we actually think the economic cycle picks up, but the stuff like inflation, the wages, the rents and stuff slows down. So this point is classically a good point for commodities. Because they get bombed out in the bad side of the cycle, and then you start to get the relief rally. So it's classically good for that, but it's also classically good for technology, which is why technology has been the best performing sector the whole year. So that's why people are so confused, because they kind of want it to be one or the other, and it's not.
So are commodities anticipating the ultimate? Are they sort of looking past this and are they just because they're coming off a bottom?
Yeah,
or
because,
are they anticipating
again,
an ultimate payout?
My point was last year this was all priced in.
Right.
So what a lot of people find funny is I say, well, the equity market priced in the economic slowdown last year, and a lot of people say that's ridiculous. But those same people are actually the commodity bulls, where the commodities priced it in last year as well. That's when most of the commodities fell and did most of their damage on the downside. So we had all of that last year. So this is it's always a confusing point in markets.
Do you think we're still going to have a recession? Or do you think that also happened?
I think we're actually in one. I mean, I don't know a single business who's not seen a slowdown. I don't know a single person who's not had to let go of staff. I've not seen any sign that we've got robust strength. So yes, you might get the government sector growing somewhat from the fiscal stimulus, but what you're seeing is the private sector struggling. And we've seen that pretty much everywhere. So if that's the case, then usually if ISM's bottomed, therefore it bottomed over the last few months, that leads GDP by a quarter. So we probably end up seeing weaker GDP numbers. We might get downward revisions soon, and then we'll get weaker GDP, I think, into Q4 and Q1, because it takes a while before it comes back up from the bottom again. And my hypothesis always was this was going to be a mild recession. It's like 1990. It's a mild recession. The markets fall kind of between 25 and 40%. Sure, some stuff like technology, the growthy end of technology went down to 75%. Some of the commodities got hit equally as hard. But overall, it's a relatively mild event, which is hard to believe with rates having gone up as much as they have. So normally, this kind of volatility happens very normal this time of year. We should expect more volatility into October, but usually that's when it stops.
Raoul Pal's insights on macroeconomics and crypto in his latest outlook are nothing short of astonishing. He vividly illustrates the underlying growth potential and the possibility of a significant upsurge in the sector, especially with the reintroduction of liquidity. The groundwork has been meticulously laid, and the framework for a new financial era is taking shape. As he dissected the macroeconomic cycle, it becomes evident that we stand on the precipice of witnessing the monumental impact of cryptocurrencies not only in the financial arena but also beyond. With Raoul Pal's expertise, it's clear that he paints a compelling narrative for the future of crypto, emphasizing its potential to reshape the financial landscape and extend its influence far beyond what we've seen so far. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.